Hey everyone, I'm your host Anya, and welcome to today's Explainer. So, if you've ever stared at your calendar and had that sudden sinking realization of, oh no, I completely forgot to file my income tax return, well, you are in exactly the right place. Today, we're having a really crucial conversation about fixing past tax mistakes. I recently sat down with veteran tax expert Mr. Ramesh, and the insights he shared were honestly so eye-opening, I knew we had to break them all down for you today. He spent decades helping taxpayers navigate the Indian tax system, and together we mapped out how a missed deadline isn't the end of the world, but actually an opportunity to use a structured pathway to get right back on track.
Missed your income tax deadline? Just hearing that question kind of induces a little bit of universal panic, doesn't it? You might be thinking that missing your filing deadline means you've totally missed your chance forever and that the tax authorities are going to be knocking on your door any second now. But as Mr. Ramesh explained to me, that's really not the case. There's a specific mechanism designed to save you from some much bigger problems down the road. All right, let's jump right into Section 1, the missed deadline problem. Mr. Ramesh pointed out something really comforting to me. Missing a return isn't always some intentional scheme to evade taxes. Usually, it's just a classic case of life happening. These are incredibly relatable oops moments. I mean, maybe you were in the middle of changing jobs and the paperwork just got lost in the shuffle. Or you were traveling abroad during tax season. Very commonly, people see that tax deducted at source, or TDS, was taken right out of their paycheck, and they just incorrectly assume, hey, everything's already taken care of. And let's be totally honest here, sometimes it's just pure procrastination. You tell yourself, I'll do it next week, and suddenly, before you know it, boom, 3 whole years have passed without a filed return.
Moving on to Section 2, ITRU, your second chance.
So, the obvious question after realizing you've missed years of filings is, what exactly is the solution? Well, the answer is the updated income tax return, better known as the ITR-U. Basically, it's a voluntary mechanism offered by the Income Tax Department. You can think of ITR-U as a bridge to voluntary compliance. Instead of just sitting around anxiously waiting for a legal notice to arrive in the mail, this tool allows you to step forward yourself. You get to fix your mistakes voluntarily before they snowball into incredibly lengthy and costly legal disputes. Now, who exactly is this for? Well, as Mr. Ramesh and I discussed, a lot of different taxpayers can benefit. Maybe you're someone who just never filed a return at all. Or maybe you did file, but you totally forgot to report a specific stream of income. Perhaps you selected the wrong tax rate entirely, or you showed your income under the completely wrong category or head. These are the exact specific scenarios that the ITR-U was designed to address. However, there is a very strict rule you've got to remember here. Taxpayers are only permitted to file one updated return per assessment year. So you really have to make sure you get it right this time.
Which brings us to Section 3, the data-driven tax era. We definitely need to dispel a very persistent myth about how taxes work today. A lot of folks think, well, if the income tax department hasn't contacted me yet, maybe they just never will. Years ago, under the old way of doing things, missing a return might actually have gone unnoticed for quite some time. But under the new way, we're in a highly data-driven tax era. Digital data flows automatically and seamlessly from everywhere. Your banks report your information, investment platforms report your transactions, high-value property purchases are rigorously recorded. So, if your digital financial activity doesn't perfectly align with your tax filings, the authorities can identify those discrepancies instantly. This crucial point was captured perfectly in this insight from Mr. Ramesh. He told me, waiting for a notice isn't a strategy, it's a gamble. I absolutely want to highlight that, because technology has completely changed the game here. Hiding in the digital era is simply impossible. You literally cannot outrun the data flow. Let's look at Section 4, Rules and Financial Costs.
While ITR-U is a second chance, there are practical boundaries and financial realities you absolutely need to be aware of. Let's be crystal clear about what ITR-U is not. It is not a loophole for refund optimization. You cannot use this tool simply to claim or increase a refund. You cannot use it to reduce your overall tax liability, and you cannot use it to file a nil or loss return. The Income Tax Department intends this strictly as a compliance mechanism to right past wrongs, definitely not as a creative accounting tool to get more money back. People always ask Mr. Ramesh if correcting a return voluntarily means paying extra, and, well, the answer is yes. You're going to have to pay the base outstanding tax you originally owed, plus the applicable interest that's accrued due to your delay. But on top of that, there is an additional tax. This essentially functions as a penalty. And here's the catch. it increases the longer you wait to file. The core message here: acting earlier makes the whole process significantly less expensive. Waiting rarely, if ever, makes tax matters cheaper. We also have to look at the recent timeline of changes, specifically some really important updates from Budget 2026. Previously, if the tax authorities had already begun reassessment proceedings against you, you generally lost the opportunity to even use ITR-U. But now, Budget 2026 actually relaxes that restriction. Taxpayers are allowed to file an updated return even during reassessment. The caveat, though, you have to pay an extra additional tax, over and above the existing ITR-U penalties. This is basically a practical balance by the government. It rewards voluntary compliance and tries to reduce nasty litigation while still applying a tangible cost to those who delayed until they were essentially caught.
All right, last up is Section 5, how to file correctly.
If you're watching this and suddenly having a realization that you need to fix your past tax filings, you need some actionable advice. So here's the exact process you should follow. Step 1. Seriously, don't panic. Ignoring the problem won't make it disappear, but panicking definitely won't help either. Step 2. Gather all of your income documents. Pull together the whole shebang and review everything carefully. Step 3. Consult a qualified tax professional. Because you only get one shot at filing an ITR-U per year, you absolutely want an expert to ensure it's done flawlessly. Addressing this issue immediately is always, hands down, the absolute easiest path to resolution.
So I'm going to leave you with this final thought. Your second chance is waiting. Will you take it before the taxman calls? Remember, in our data-driven world, they already know what you owe. The ITR-U is simply your opportunity to step up and resolve it on your own terms. A huge thank you to Mr. Ramesh for sitting down with me and helping us simplify this really critical topic. If you found this explainer helpful today, please make sure to hit that like button, share it with a friend, subscribe, and drop a comment below with any tax topics you'd like us to cover next. Until then, stay informed, stay compliant, and take care.